JSE Safex style options, a great choice.
Welcome back to Wealth and Wisdom. With me tonight is Simon Brown, and we're talking about the macroeconomic situation and some ways you can try and preserve your wealth. So Simon, what about tangible assets in sort of the light of this? Well, one of the theses I've heard is buyflation. You know, food price inflation has been rocketing since 2008. Stocks haven't done nearly as well.
So, some of them have, and if you look at pure food stocks, Tiger Brands has done fairly well because they're able to pass it on to their retailers because of strong brands. Of course, the risk is at some point the consumer says, you know what, those 2 packets of biscuits are broadly the same. The one costs me more because it's got a face I recognize or a logo I recognize on it. Okay. I'm going to move towards the cheaper one. We've also seen, in terms of the retailers, they've been able to pass a lot of that on, but at some point you get consumer resistance, and then everyone reverts back to, the classic one, and everyone says, well, then it's about gold. And I'm yes and no, maybe, perhaps. Gold seems stuck. It peaked when the US got downgraded August last year at $1,920 odd dollars. It's not currently trading sort of $1,550 to $1,650. What we see with gold is that it moves on fear. On the actual event, it typically seems to retrace. It needs that fear. We have the fear. You look out there and you just see the fear. What we need is a new elevated fear. And what that would be, I think, is something happening in the Eurozone, a default from one of the countries. And I don't know that we're going to see that. So don't get me wrong. I'm not saying the gold run is over. I'd never be as silly as to say that. But I certainly think that I'm not sure what the next leg up is going to be driven by, because we've got all the fear out there and gold is sitting around the 1600.
Why gold?
The theory behind gold is that it's the ultimate store of wealth and the like. And I got to say, we've used seashells in our recent history as well. We've used bear skins as well. Gold wasn't the first one. It's probably not going to be the last one. People like gold because they say, you know what, it's not necessarily finite, but there's a measurable amount. You can't create it out of thin air, and it's divisible. You can pass it around and use it.
Oh, that's important. You can shave off a little bit of gold. You can have a gram of gold for one thing and sort of 10 grams for something else.
Yeah, but my view is if we move to a point where I'm paying you in gold, I think we've got bigger troubles right there. Yeah. Probably there's no more power grid anymore.
It's that Warren Buffett thing that it's sort of a bet against mankind's ingenuity.
We're back to Mad Max, and then really you want pumpkin seeds and water. Gold has done incredibly well, rallied off the under 300, now sitting at 1600. But if you take it over the last decade, Tiger Brands has actually done better than gold over the last decade as that hedge against inflation. If you take, they've spun off some assets and obviously the dividends they've paid, Tiger Brands has performed better for you than gold. Now, part of that could be currency because gold is in US dollars. You bring it back into rands, and the rand strength hurts the gold.
So there's a fascinating new product that you can trade that gets around some of these rand gold issues. I know in the past I've traded some of these gold futures, and the problem is the rand moves sort of exactly opposite to gold. So as gold goes up, the rand gets stronger and your returns get diminished. It's sort of a vicious cycle. So
we saw that in 2009. Gold went up 30% in dollars. Rand strengthened 30. Rand gold went sideways. So what you could do with the commodity futures was take a currency future equal but opposite, make a structured product that's getting complicated and adding layers of costs. New product out, launched just last month, coming through Quanto futures. And what that does, it gives you a gold price in dollars. So you go long at, say, 1600. You close the position at 1700 in dollars, and you make a rand per dollar move. In other words, they removed the currency impact from it. Now, the actual pricing behind it is probably more complicated than black skulls. But as a trader, what you see is there's a dollar price, and as that dollar price moves, you're going to make a profit.
So you get that
ignore the currency
term return in rands that they would make.
Absolutely.
In the States.
Quanto futures, currently there's Brent, there's gold, there's copper. No doubt there will be more coming from the exchange. But it does mean that now you remove the currency risk from the process, you take your bet on gold.
We've been talking about these issues going on macroeconomically. One of the things I've read about that's quite worrying to me is drought in the States. Having an impact. What sort of impact do you think we're going to see?
And it's a significant drought. When droughts come and go, this one is certainly one of the worst in generations. And the immediate impact is it takes your maize prices, your corn prices in the state, pushes those higher. That's the immediate impact. The follow-through impact is that those prices then go into a massive amount of our staple foods and the levels of bread and the like. It's in milk because your cow ate it to produce the milk. It's in beef. It's in chicken. We've we've seen stocks in that space under pressure, it has massive ripple effect coming through everywhere, because almost all food stuff starts at that core of wheat, of maize, of corn as the underpinning.
So do you think there could be more price inflation? I mean, poor South African consumers have been really sort of burdened by this consumer price inflation, really, especially on food and the basic staples. The numbers are quite horrifying, just rocketing up. That inflation basket really is disproportionately impacting the poorest of the poor the most.
And we've certainly seen on the maize futures in the South African space have moved very, very strongly. It's been the trade of the year, although largely ignored, because I think many people don't look at the agri futures, they look at the financial side of things. But the white maize, they had a phenomenal year, and it's run. So that price has moved. Now it's starting to work itself into what we call the consumer facing, which
so
will be
beef can be going up, chicken will be going up.
All of those sort of products are going up. Now, in some sense, if the Tiger brands and those folks can pass it on, they're doing less well. The chicken guys are really struggling. They're unable to pass it on because of imports out of Brazil and out of the Europe. So we've seen them under pressure. At some point, it'll turn. But at the moment, it is there. It is driving very, very hard. And then the question is, well, when does the drought end and how much further can it go? And the answer, I don't know when the drought can end, but quite simply, you want a long position in there. There's an exchange-traded note. You can get a wheat exchange-traded note, and you watch that. When it starts to rain in the farmlands of America, close your position. But until it rains,
come right down.
We've got more upside.
Simon, thanks very much. Next week, we'll be looking at the origins of the South African stock market, how it really got going, and some of the history of the idea of a joint stock company, which is a company you or I can own a small stake in, which is what we call a share.
Wealth and Wisdom was brought to you by the Johannesburg Stock Exchange.